What is going on, Future Focus Nation? My name is George, and I make videos to help you make money investing. Today, I'm going to be talking about AT&T stock, ticker symbol T. And even though I'm not a financial advisor, today I'm going to give you reasons why I feel you should really consider adding this stock to your portfolio. Before we get into it, I wanted to let you know that you have until May 23rd to join the Fantasy Stock League that we currently have going through the end of the year. All you need to do is pick 3 stocks that have not been picked yet. If you want more details, hit me up at my email in the description below. But with all that said, let's get right into it. The first reason I think you should consider this stock is a macroeconomic one. If you heard Janet Yellen talking about it, or if you heard Warren Buffett talking about it, then you know that inflation is coming. So the statements she made on inflation, she kind of walked them back because there's 2 sides, the monetary policy and fiscal policy. If you're part of the monetary or fiscal policy, you shouldn't be speaking on the other side. And she did speak on it. She used to be, for those who don't know, the head of the central bank, the Federal Reserve. She used to be the chairman of it, so she should know better. The initial comment she made deepened a sell-off in tech stocks and pushed longer data treasury yields higher. If you have been paying attention to the 10-year yield, then you could see that it's doubled in the last year. If that rate continues to increase, it will continue to decrease the prices of growth stocks. So it is important to have a diverse portfolio that doesn't just include growth stocks. You should have some dividend stocks in there as well, because as that yield goes up, the dividend stocks, they become more attractive and those prices go up. It's called a rotation, when there's a rotation from growth stocks to value stocks. And the last thing you want to do is be one of the last ones to the party when that rotation occurs. With the way inflation has been rising, that rotation is inevitable. And in fact, it has already begun. Another reason you should consider putting this stock into your portfolio is the fact that they pay a large dividend, and that dividend has been increasing for a long time. As you can see, here are AT&T's historical common dividends data. So in 2021, it was 52 cents per share. 2020, 52, 2019, 51, 2018, 50, 2017, 49, 2016, 48, so on and so forth. So as you can see, they've been consistently raising the price of that dividend, which is something you really want to see as an investor. It shows confidence in the company. From their latest investor call, AT&T declared dividends on common and preferred shares, so they're going to continue doing it. The board of directors of AT&T today declared a quarterly dividend of 52 cents per share on the company's common shares. Keep that in mind. They're not only a company that maintains a dividend, but will continue to issue out that dividend. When you see companies that continue to cut their dividend or to give it some quarters and don't give it some quarters, it's because they don't really know how to manage their money. But obviously, AT&T is doing something right. Historically, they have been troubled with debt. However, since their new CFO has taken over, they are really changing the ways that they're operating with their capital. AT&T CFO John Stevens updates shareholders. John Stevens, Senior Executive Vice President and Chief Financial Officer of AT&T, spoke today at the Deutsche Bank Media, Internet and Telecom Conference, where he provided an update to shareholders. Mobility. Stevens noted that AT&T believes it has the right approach to the market, providing customers with the best possible wireless offers to reduce churn and maintain a high-quality base. The company has continued to invest strategically in its network, including during recent C-band auction. Stevens says that through its flexible plans and best offers, AT&T is attracting and keeping customers on its higher value plans. Stevens reiterated that AT&T continues to expect wireless service revenue growth in the 2% range in 2021 as the company continues to add customers and connected devices. Stevens said fiber is the foundation of AT&T's network, including broadband connectivity and 5G. Stevens said AT&T's agreement with TPG to form a new entity named DirecTV to operate its U.S. video business unit will better position AT&T to maximize the benefits of long-term strategic trends influencing its business. He reiterated that maintaining a stake in the U.S. video business will allow the company to participate in future value creation opportunities. One of the future value opportunities that he is talking about here is advertising. One of their segments of their business that falls underneath the AT&T umbrella is Xandr. And Xandr is a company that makes advertising better. With one of the world's largest collections of digital film and TV properties, we provide a premium option for advertisers and publishers looking to reach specific audience at scale in brand safe environments, all through a powerful unified platform. Our combined assets, including data insights, premium content, powerful technology, and scaled direct-to-consumer distribution, give us a competitive advantage, helping to improve advertising for brands, publishers, and consumers. Now, this content that they were referring to is all the products that fall under AT&T that a lot of people don't even know exist. AT&T has Time Warner Media. AT&T has Warner Brothers. Under Warner Brothers umbrella falls movies like King Kong, which just became the highest selling movie since the pandemic. They also own the intellectual property for the entire DC universe. Warner Media. We bring a fresh approach to how the media and entertainment industry work for customers. We'll bridge the gap between premium content and connectivity to that content. We deliver the world's best stories and most engaging content from talented storytellers and journalists to audience around the globe. And here are a few movies, a few products that fall under them. As you see, you got DC here, you have CNN, you have HBO, you have Warner Media News. They also have another product that has been released called AT&T TV. They have Direct TV, and they also have HBO Max, which has become a high competitor to Netflix and Disney. Just in the past year, they've had major hits like Wonder Woman and Godzilla vs. King Kong, as well as Mortal Kombat, which just released. Just like Disney uses the TV shows and movies of the Marvel Universe to keep people locked, Warner Brothers is going to do the same exact thing with DC Media as they create TV shows that intertwine with the movies, which will keep viewers locked and increase subscribers. Stevens noted that under the terms of the deal, at closing, AT&T will receive $7.6 billion in cash, which it intends to use to reduce debt. Now, this is something I've been waiting to hear from this company. They are committed to paying down their debt. This will cause a chain reaction. As they pay down debt, the value of the company will increase. Investor sentiment will rise, and thus so will the stock price. So not only do you have a stock that's positioned to be a growth stock and has a lot of room to grow, you are going to get paid a 7% dividend while you wait. Another reason you should consider investing in this company is the quarterly results. They were outstanding. The last few years, T-Mobile and Verizon have outshined this company. However, Verizon didn't report a great quarter, and AT&T reported a greater than expected quarter. So these are some of their highlights from their quarterly financial report. As you can see here, quarter one 2020 compared to quarter one 2021, they raised the bar a lot. Their adjusted EBITDA did go down. However, they explain here that the ongoing video impact, significant HBO Max investment, and mobility EBITDA growth. EBITDA is just earnings before interest, taxes, deductions, and amortization. And amortization is just a depreciation of all their assets that they have. Here on the right, you see the select subscriber metrics. And here you can see that their wireless, broadband, HBO Max, and HBO subscriptions have all increased year over year. Here's another visual that depicts the increase quarter over quarter that they have experienced. Here you can see they have higher subscriber growth and improved advertising trends. Remember, advertising makes a lot of money. This is how Google, Facebook, they make a lot of money from advertising. And right now, AT&T is capitalizing from all of that. HBO and Warner Media. Stevens noted that AT&T has seen positive results from the hybrid distribution model for its 2021 film slate. This model has positioned Warner Brothers as the only major studio steadily releasing content to theaters as well as directly to consumers through HBO Max. Given the accelerating timeline for COVID-19 vaccines, the company expects a modest theatrical recovery in the second half of the year. The company also remains focused on building the success of HBO Max to establish relationships with U.S. households and is focused on investing for the long term. Financial flexibility is very important. The company remains committed to its capital allocation plan to grow customer relationships across 5G, sustain the dividend at current levels, reduce debt, and monetize non-core assets. Stevens expects that free cash flow after dividend plus funds anticipated from the video transaction and other asset monetizations would give the company flexibility to reduce debt following the recent spectrum auction. Now, another reason to consider adding this to your portfolio is that after these earnings were released, the stock has slowly increased up, while other companies like Apple, Google, Facebook, these big growth companies like we talked about, they all had blowout quarters, which are great. However, their stocks did not reflect in the price after that. A lot of those stocks have even gone down. And this is another reason I feel that this is a great add to any portfolio. It doesn't have a lot of volatility that a lot of the other stocks have. Here you have the stock quote and chart. The current price is $32.02. It has a $228 billion market cap. The 52-week high was $33.24, so it's currently under the 52-week high. However, the 52-week low was only $26, so it hasn't really moved much. However, the 52-week low was not even that low. It was $26.35. So even if it went down to that, your stock wouldn't even drop that much. And again, here you have that dividend yield, 6.5%. Here you have the 3-year chart for the company, and as you can see, it's traded mostly sideways between the $26 range and the $39 range. As we take a closer look, we get deeper into the 3-month chart, you can see that the stock has slowly risen and the level of support has risen as well. There's been higher highs and higher lows, which is always a bullish sign for a stock. Here was yesterday's action. You can see that it hit a low of 31.58 and a high of 32.08, and it finished up for the day on the highest amount of volume for the day. So there you go. I gave you reasons why I'm bullish on this stock, but I want to know what you guys think. Are you buying, holding, selling, or avoiding it like the plague? Let us know in the comments below. As always, invest in me and press that like button, invest in yourself, and smash that subscribe button. It costs you nothing. Until next time.